Hello traders, this is BA and welcome to another edition of the Weekly Perspective for October 15th, 2017. Let's get started. Quick look at our objectives for the Weekly Perspective. We put this out every Sunday in order to analyze long-term market trends. Take a look to see which sectors are leading the pack. We also want to know which ones are lagging badly. We want to better define the market's environment and cultivate ideas for the next week. And as always, any of the recommendations we put out in the Weekly Perspective are for educational purposes only. We'll start out with major markets. We're going to take a look at the 3-month comparison, and the major markets are the markets that I have dubbed as the markets that rule the earth. These markets here captures the essence of everything our global economy rests on. So right now, the 3-month comparison for the markets, we've got oil up 8.25%, Dow's up 6.5%, gold's up 6%. Gold's had a pretty good snapback rally. The Russell stocks, small cap stocks up 5.75%, tech stocks 4.5%, S&P up a little over 4%, and bonds. We're using TLT as our proxy there for the bond market, which is not quite 10-year, not quite 30 years, somewhere in between. So those are the markets that we're actually looking at here. And all of these performance figures are approximate. There are no dividends calculated in either. So anyway, what's interesting is that for the 3-month comparison, the performance for all of these markets are starting to tighten up. I don't know what that means, but they are all starting to tighten up, and that will not last for long. We will have we'll have some markets that break away, bifurcate, and just go scream higher. Some that are going to scream lower. I'm not sure which ones those are. We have stock market wound really tight right now at highs, all-time highs. We've got gold rallying back. Small cap stocks are just on a plate. If we look at a long-term chart, the Russell, we can see just weeks and weeks. It looks like it's sitting on a plateau. To me, they look very bullish still. But we'll see. Anyway, this is a comparison for 3 months. Not a lot to conclude from this right now. We know that there's major news out from OPEC regarding the oil market and how they were trying to get the price up. See how that pans out. We've got some interesting ideas in the bond market too as we move on down. So let's look at the commodities and the agricultural markets. So right here we see cocoa, and again, this is a 3-month comparison. You know, cocoa's up 10%, the agribusiness model is up 6.5%, and then everything else is below the line. I really like the coffee trade. I looked at it, plugged it into our top and bottom picking tools, and coffee looks really, really good right now. So I am very close to putting out a recommendation on buying coffee, probably a bullish call debit spread in coffee, or buying the calls outright. You know, probably about 3 months out into the future. So yeah, coffee looks really good. I'm still waiting on corn to see if we can get a trade in on corn, and more than likely I'll use the futures markets for corn. I'll use the JO ETF for coffee. FANG stocks. You know, when we opened up, we talked about the markets, global markets that rule the earth. Well, here are the stocks that, I should say, individual stocks that rule the earth. There's a few more sitting outside of the border of the United States that could probably be included in this group. But when it comes to business models and getting things done, man, there's none better than these stocks on this page right here. You see Netflix up 24% 3-month period, and then Amazon just got above the threshold into the black for the 3-month look here just this week. So Amazon has had a nice little run up, and if you'll remember last week I mentioned that Amazon is the only stock right now we should be looking at for long trades, simply because of Amazon was coming off of a low, certainly lower than all the other stocks. It appeared to have found a bottom. So right in here is where I was looking at, out of all of these, Amazon was probably the best stock to play to the upside. Now I was dead wrong. You could have played Netflix, you could have played Nvidia, and you just close your eyes and buy those. It seems like any time and make money with them. But at least we've got all the FANG plus stocks, above the watermark now for a 3-month comparison. So we're still going to be looking at Amazon, and any pullbacks in Netflix, Nvidia, any of these stocks. If we get a stock market pullback in any way, shape, or form, these are the stocks right here that we need to really concentrate on in the options trades to the long side. Dow Jones Industrial Average. Okay, I wanted to show this chart here just so everybody could take a look at this. And I know a lot of guys have heard me say that I've never seen a market like this. I've been saying it for 2 years. Just this year we really got into an environment where the data has just this is a 1 in 150 year bull market. I mean, there is not another market in the stock market's history that's been like this one. And anybody wants to dispute that, just look at the data. I mean, this chart right here goes back to 1900, and look at the run we've had in this stock market since 2009. I mean, just one of this low right here. I mean, if this is not one of the most or the straightest up bull market runs, yeah, you can see the little that little blip right there was otherwise known as the depression back in 28, 29, and 30, or 29 and 30. So just a really interesting look at the market and how this thing is just not given an inch. How much more can it go up? Who really knows in a market like this, where there are no fundamental reasons other than the central bankers' intervention that have flushed this markets and all of our institutions and everywhere you can look with cash. I think they're getting what they were after. I don't know if they're getting the effect that they wanted, but certainly asset prices are higher across the board. I can't tell you how many mornings I've as soon as I turn my computer on early of a morning and I see nothing but green across every asset class. You do not see that. It's very rare in normal market environments when you see stock market up, bond market up, gold market up, crude oil up, nat gas up, livestock up, soybeans up, corn up. The number of days probably in the last 20 years that I've witnessed that you could probably count on 2 hands. I've seen that so frequently this year that it has just become another normal market observation for me, which is really, really strange. I know it's not normal. It in no way is it normal. And this market will revert back and correct itself and pull back into some form of two-sided action. I mean, guys, this right here is just, that's insane. That little bit of two-sided action plus a straight-up run that we've never seen before. We just don't know when it's going to correct. Nobody does. But she's definitely on a run of her life. So enjoy it in those 401ks. Definitely being good to the folks. I hope when this thing rolls that a lot of folks are in the mindset of shifting some money into cash. How much lower can we go in the VIX? This is a look back at the VIX, and we're going back to 1997. So that's at the bottom there. Let me see if I can get that. Okay, there you go, CDC. All right, so again, we're right against the line in the sand here that is triggered in 2007 when we had the housing bubble and the complete decimation of the market environment for about 2 years until 2009. We're there right now. In fact, we've made an all-time low. We hit 8s earlier this year in the VIX. The VIX is not broken. It's just, again, this is my opinion, it's just so complacent out there. When you never have a down day, when you wake up every morning and the only question you have to ask is how high is the stock market this morning, that's complacency. When the up moves are measured in weeks and the down moves are measured in minutes, when that ratio is just how I described it, we are way out of kilter. And the market will revert back to its mean. I've continued to say that because that's what the market will do. Historically, for as long as we have data, there is only I think it's 51 or 52% odds of the market or closing higher the next day than the prior day. Only 52% chance that the market will be higher, from one day to the next. So that's the typical, win-loss from one day to the next. If you were putting a trading system together, you would probably have. Well, I know because I wrote a strategy back in the late 80s to try to do that, and there just was no advantage in all the data I had of buying one day at the close and selling the next day at the close. Now, had we been doing this for real since 2013, you would have made a fortune. For the last 4 years, we're well above 90% for markets closing higher the next day than it's closed the prior day. So that's just an unbelievable stat. And anybody that that's traded for a long time knows that that's just not the way it happens. It just happens now because this is a market that we'll probably never see. Market environment we'll never see in our lifetimes again. So anyway, VIX is at a low. Normally I would, as I said up here, I'd normally be mortgaging the house, making a bet on higher volatility, but we are not in normal market times, so I'm going to stand back and see how all of this plays out. We have plenty of other trades to put on right now, and the stock market is not a normal stock market. I cannot play the stock market indexes the way I have for decades, so we just have to play a different game right now. Weed stock. Hey, I like following these because these babies are moving. They're low cost. They're like buying options. So anyway, these are good plays for us. I'll keep watching and keep applying my top picking, bottom picking, and continuation patterns. I'll keep watching those. So right now you can see, you've got the XXII up 71%. Your top three are up well above 45% for the 3 months. And I'll certainly keep a watch on Zine. That one showed some promise a couple of days ago. We'll keep a watch on that, see if we can take a shot at some weed stock. Dogs of the Dow. If you go to dogsofthedow.com, you can go to that website, and they will. There's a really nice write-up on what Dogs of the Dow really is. I have read the book on Dogs of the Dow probably about 25 years ago, and the data is just so compelling at how simplistic this is, how you could just buy the dogs of the Dow, and for decades, you've just trounced the stock market. So the premise behind the dogs of the Dow is, at the end of the year, the beginning of the new year, you take the five. You can do this any way you want to. You can take the worst performing stock, the worst 5 performing, or the worst 10 performing out of the Dow. There's data sets on every one of those options right there on how they performed against the S&Ps. But we're just looking at the bottom 5, and how the bottom 5 are the worst performers is in accordance with the rules of the dogs of the Dow principles. It's the 5 stocks that yield the most in the Dow Jones Industrial Average. So you take those dogs, of course, if they're yielding a lot, they are underperforming, and the theory is that at some point in time, these stocks will catch traction and trounce the market, and they have decades of data to prove that. I like watching these stocks simply because I've done it for a very long time. When I traded stocks, this was one of the group of stocks I watched all the time. Simply because when you get that, like GE right now, it looks like it just wants to go out of business. Trust me, it will not. That stock will come roaring back at some point in time and completely obliterate the S&P. So that's a year-to-date comparison. Let's look at 3 months, dogs of the Dow. And you can see down here GE is the one I'm really interested in most. Here's the S&P. And then 3 months, guys, I want you to take a look back here, year to date. How much ground that Chevron and Verizon made just in 3 months over the S&P. I mean, just completely. That's all you need is one of these trades in a 3-month stretch with an options play, and that's a nice option trade right there, guys. So that's what we're looking for. I'm honed in on GE. I put a trade on in IBM. I think 2 weeks ago. The trade was profitable right from the get-go. Took profits on a portion of it, and we still have some in. Riding into on the sunset with it. So that trade worked out, and we're just waiting to get something on GE. FOREX pairs. Got 3 pairs that I'm looking at for trades this week. Really excited about the way the currency markets are shaping up right now. I've got just a plethora of trade potentials in FOREX, currency, futures, and several other markets. Talk about those in just a few. But all these are short trades. We're going to be looking at going short Euro US dollar. We're going to short Australian dollar, Japanese yen, and we're close to a possible short in US dollar, Canadian dollar. So anyway, all of these trades will be put out in the daily T&B report. So let's look at our summary. Guys, stock markets are just, the indices are just way too extended. We need to wait for a pullback. That likely target, if you pull up a monthly chart of the SPX, likely first target is going to be last month's low. So at some point in time, guys, we have got to take out a prior month's low in the stock market. I know it's 120, 150 points away, and I know that seems, how can the stock market go down 150 points from here? I know that seems very unlikely, or 1,000 or more in the Dow is what that equates to. But we're up for the 11th month in a row where we have not taken out the prior month's low in the SPX. That has never happened ever. So that's something that's going to happen. That's a likely first target. When we do get the sell-off, you can bank on at least taking out prior month's low. Not that it's going to close below it, but take it out. So, but until then, market's just going to keep making new highs every day. There's no premium in any of the index options. So, I mean, you're just, unless you're buying bullish plays, there's definitely no selling to be had in the stock market indices right now. All right, bond market. Bond market's rallied hard this week in light of a stock market making new highs every day. It rallied hard, but it rallied into an area where I'm ready to put a short trade on. So I have a short trade in the 30-year bond futures markets. So we're going to put that out in the daily TNB report as well. Coffee, like I said, is very compelling right now for a long trade, so I'm going to be looking at that and may put that trade out as well. Any pullback in the FANG stocks, and these go on our buy list. We've talked about G&E being the most compelling trade right now for the dogs of the Dow setup. We just don't have any triggers yet, so we'll be watching that one every day. As far as our winning sectors go, this is just a list of sectors that have scorched the landscape, and any pullback that we get, any sell-off we get, and wherever we get long signals, we're going to drill down into those sectors for those leading stocks. Try to take some long trades on those things. Forex pairs, like I said, we have several trade ideas for the week in British pound, Euro US dollar, Australian dollar, Japanese yen Forex pairs. Here's all of our contact info, guys. Website, email address, and if you want to subscribe to the daily TNB report, just punch this into your browser. That's it. That is a wrap for this week's edition of the Weekly Perspective. We're grateful for you guys tuning in, and this is BA signing off.